Have you ever heard the phrase, the stock market always goes up? Well, that's only half true, because if it always went up, nobody would ever lose money. And yet, millions do, every single year. The truth? Most small investors don't lose money because they picked the wrong stock. They lose it because they never understood the game they were playing. Today, we're going to talk about the secrets that no one tells beginners, the real risks of the stock market, and how you can protect yourself like a pro, even if you're just starting out. When you open an investment app, it feels exciting. The charts move, the numbers grow, and you start to think, maybe I can be the next Warren Buffett. But Buffett himself once said, "The stock market is a device for transferring money from the impatient to the patient." Most people aren't patient. They buy because their friend said so, or because TikTok or YouTube told them it's going to the moon. So before we talk about making money in the market, let's first talk about not losing it. Because rule number one, again, from Warren Buffett, never lose money. Rule number two, never forget rule number one. Let's uncover what's really behind the screen. The risks, the psychology, and the traps most small investors fall into. Let's break this into 5 big secrets that every small investor must know. Secret 1. The market is not the economy. People see the stock market going up and think the world is doing great. But as Nobel Prize winner Paul Samuelson once said, the stock market has predicted 9 of the last 5 recessions. That means the market is emotional, not rational. It doesn't care about reality in the short term. It's driven by fear, greed, and algorithms. So don't confuse a rising chart with a healthy economy, or your future profit. Secret 2. Risk. What you don't see. New investors think risk means volatility, price going up and down. But the real risk is what you don't know. Hidden company debt. Inflation eating your returns. Governments changing tax rules. Your own panic selling. As Peter Lynch said, the key to making money in stocks is not to get scared out of them. Risk isn't something you can see on the screen. It's something you prepare for. Secret 3. Your brain is your worst enemy. Behavioral economist Daniel Kahneman proved that humans feel losses twice as strongly as gains. That's why a 10% loss feels like heartbreak, and a 10% gain feels like meh. This makes people sell too early when afraid and buy too late when greedy. So, mastering the market is really about mastering your emotions. As Charlie Munger said, the big money is not in the buying or the selling, but in the waiting. Secret 4. Time is the real superpower. Most small investors underestimate the power of compounding. Albert Einstein called it the 8th wonder of the world. Even a small amount, invested early and consistently, can grow exponentially. Example, if you invest $200 every month at an average 8% annual return, in 30 years you'll have over $270,000. If you wait 10 years to start, you'll have less than half that. So the secret isn't timing the market. It's time in the market. Secret 5. Diversify, but with purpose. Diversification doesn't just mean buying a bit of everything. It means protecting yourself from what you don't know. Don't just buy tech stocks because they're hot. Don't just buy real estate because it feels safe. A balanced portfolio across stocks, bonds, ETFs, and maybe index funds helps you survive any storm. As Ray Dalio says, he who lives by the crystal ball will eat shattered glass. So stop guessing the future. Build a plan that works no matter what happens. Here's the truth. Investing isn't gambling. It's a lifelong skill that rewards patience, learning, and discipline. You don't have to be a Wall Street genius. You just need to understand the rules of the game and avoid emotional mistakes. So the next time someone tells you the market always goes up, smile, because you know better now. If you found this helpful, subscribe, share it with a friend who's new to investing, and let's build smarter investors together.